Good evening, everybody. This is Luke from Breakout Trading, and tonight we have the Stay in Your Lane course. And let me pull this stuff down and pull up what needs to be pulled up. So, the Stay in Your Lane course is probably one of the most valuable tools I can teach you. It is effective, it works, and I'm about to prove it to you. And let's talk about a couple things real quick. There's something going on right now in the stock market where it's flat. If you look at the stock market, if you look at, I don't know why I'm in February. That's just where it opened me up at. Let's see if we can't go to Friday. Friday is not available yet. We'll go to this Thursday. By the way, this is the on-demand feature of, let's pop back to 9. Probably take me 15 minutes to do that. All right, so the market has been, this is the on-demand feature that's with Thinkorswim, and you can literally go to any time in the market, set up a virtual account. I don't know how much is in the virtual account. It says 13,000. I didn't set it like that. I don't know why it's like that, and it looks like I own some stuff in the virtual account. Yeah, I'm gonna want to sell that. I don't know when that's from, but that will interfere with today's broadcast. Cancel replace order. Let's just go ahead and market order it so it sells. Oh, okay. I have to wait for the market to open. It's not open yet, but the market will, that'll sell once the market's open. And then we'll have about, let's turn this on here, about, oh wow, yeah. We'll have a lot of buying power. But that's not technically unrealistic with the way we trade. And I'll explain that in a second. So this is the on-demand feature. You can go to any time, back to any date. You can practice trading however you want. And I'm simply going to use it today. Obviously, I can't show you how to trade the open because we're live streaming at the open. So this is the perfect tool for me to show you how to stay in your lane, how to identify the channel, see the signals when the market is about to get out of the channel, and then capitalize on that. Now, that might make no sense right now, and I don't expect it to, but it will if you just stick with me for a few moments. All right, so first things first, it's not an unrealistic account for some people. In my group, 90% of the group have less than $5,000 in their group, in their accounts. They're just starting out, and that's where brokerages like this come in play. This is the TEFS Trader. It comes with the trading program. I can't think of it right now, but if you're on Facebook and you look down, it's down below. This is an $80,000 funded account. It's not a leveraged account. It's an actual funded account that costs $2,700, and they give you $80,000 to trade with. This is a great tool for the kind of trading that I'm about to introduce to you, or maybe not introduce, but just demonstrate. It allows you to buy and sell with very rapidly, and commissions are relatively low. I think it's 0.075 cents. It's like 3/4 of a penny a share. So it's relatively cheap, and Everything about it's pretty good. All the links are below on Facebook, and I'll add the links on YouTube as well. TradeNet, that's what it is. Anyway, so this is a great account to do that on if you have a low balance. Now, if you have the money and you have the funds, and you don't need to get a funded account, a sub-funded account is what they call it. Let's just pretend that you had $105,000 in your account, and you wanted to trade the market in the position it's in. Now, if you look at a chart of the market, let's take a look at the 1 year. Oh boy, lots of lines on that. Maybe it's better to do that over here. Yeah, here's the 1 year chart. And let's take a look at the recent times. It's kind of flat. It's kind of going up and down. I mean, but this is just, it's not going anywhere. It's bouncing in between this like 278 and 275, 285 range. It's just bouncing, and it's not really picking a direction. And based on how volatile the market typically is, this is sorry, this is not the right one, is it? Yeah, oh yeah, it is. Based on how volatile the market typically is, I mean, look at all that. In relation, this is pretty flat, but it's also very volatile at the same time. There's a lot of volatility going on. The market's trying to pick a direction. It's almost consolidating, and it's going to break out to a certain point. Now, when you're trading the market, and I'm talking about the stock market, there's 4 important things you need to know about. The first one is obviously the S&P 500. Okay, this is the stock market. You know, you have the NASDAQ and the Dow Jones you always hear about, maybe the Russell, but the best indicator, and this is not just from me, this is what financial experts say, and this is how it always has been, the best indicator is the S&P 500. And why is that? Well, multiple reasons. The Dow Jones is only made up of 30 stocks. A good example is when Boeing had that incident and went down 20%. It brought the Dow down with it, like a lot. The markets were up that day, but the Dow Jones was down. So having 30 stocks as an indicator is not great. The NASDAQ is more or less a exchange. It's kind of hard to explain if you're not familiar with this terminology. But the S&P 500 is made up of 500 stocks, 4 of which are industrials, and then you have your technicals, healthcare, blah, 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 blah. It's the best indicator for the United States markets. And for that reason, I like to keep CNBC on or something showing me the news when I'm trading the market, just in case something happens. For example, I can't show you on this one, but Friday, Kudlow came on, and we were talking about shorting the market, and the second Kudlow came on, the market shot up like 100, not 100 points, like well, yeah, about 100 points, but in here it's less. You know, the actual market, the S&P 500, let me see. I think I can show you SPX, maybe that'll work. Yeah, the actual market is in digits of, it's 2,940 was the high, and then that's the actual numbers. The SPY is an ETF. It just basically mimics everything the market's doing, and it's good to use as an indicator, and it's good to also trade in certain circumstances. Now, over the past 2 weeks, we noticed something very interesting happening. The stock market, the S&P 500, has been creating these channels and has been staying within these channels like it's its job. Now, the channels is nothing new, and what I mean by a channel is for example, if I were to use this as an example. If you look at this, it kind of looks like a channel, right? It's almost like a lane. Now this is the yearly chart, so this is not that important right now. What I want to look at is, first of all, those four stocks that are very important. So this is the first one. This is the SPY. This basically monitors what the market does. And lately, the market has been going into channels and exiting the channels, and the second it exits the channel, it has been reversing. And we've been capitalizing on that. We've been playing both sides, ups and downs. And I'm going to get more and more specific as I go on. So this is the indicator for the S&P 500. Now this is the VIX, okay? And these are both yearly charts. This is the volatility index, sometimes called the fear index. And what it does is whenever the market is, you can see when we had that flash crash in December, whenever people are fearful and there's a lot of volatility, this shoots up, okay? Now that's very important. Now, how can you trade this? I want to say, hey, well, when the market's crashing, I would like to trade something like this, right? Because I'll make money when the market's crashing. Because look at the SPY in relation to the VIX. They are opposite. In some extent. So when the market was crashing here, let me get rid of all these lines. Give me 1 second. There we go. That's much better. So as you can see, when the market was crashing around Christmas time, the VIX was shooting up. That's great, right? That's good and all. That's wonderful. But I want to show you something else. It went from $20 to $36. Big whoop, right? Really, honestly. Now, they have, again, the VIX is not tradable. The same way the SPX, the actual S&P 500, SPX, is not tradable. You have to use an ETF to do it. Right? Can't trade this, can't trade this. So in order to trade the S&P 500, you have to use the SPY, right? And in order to trade the VIX, you have to use either one of two options. The best one to use is one called the T-VIX. Now, I'm going to show you something. You remember the crash of 2008? I'm sure you do. I want you to take a look at this and keep in mind there are a lot of splits in here that you have to take into account. But I want you to take a look at the T-VIX back around when we had the crash in 2008. So let me go to time frame, custom, from that's today's date all the way to, let's go 2007, and we'll do aggregation period. Let's just do month. Yeah. So as you can see, when the market crashed, I would like to say if you had one share and the market crashed, and you had this when the market crashed in 2008, you would have $280 million or whatever the heck that is. But let me explain something to you real quick and real simple about what these things are. T-VIX is actually an ETN, not ETF, ETN like November. And what the company that owns it, which is Velocity Shares, is doing is taking debt, packaged debt, and putting it into an ETN that they know will eventually downsize. So people lost tons of money on this going down from here to here. And that's how this company pays for its debt. Because people will come into this and they'll day trade it and they'll lose money, or they might hold it and they'll lose money. This always is headed to the downside because it's packaged debt. And that's just a little background thing if you ever read the Starts with a P, and it'll come to me in a minute. Can't think of it. Can't think of it, but it's that thing that stocks give out to show you exactly what they do and how they operate and all that. I can't think of the word. Anyway, so yes, this is the TVIX. This is a great way to trade the VIX. You can buy, sell, whatever. So, if you were around December, smart enough to get in this at $34 or whatever, you could have held it all the way to 87 in 1 month and made more than double your money, almost triple your money. Yeah, about triple your money if you got in at 30. So that's pretty cool in and of itself, but I'm talking about using this on a daily basis, and I'm talking about getting as much out of it as I can. Now, this is obviously much more volatile than the VIX. The VIX only went from 20 to 36. This went from 20 to 80. Well, this is actually, if you read it, the TVIX is the 2 times daily. It's like the 2 times. I want to come up. It won't come up, but it's 2 times. It's about, I think the algorithm is 2 times whatever the VIX does, but it also takes into account what the market does. It doesn't, and the two have a relationship, but you can't trade options, unfortunately. Oh, the market just opened, and that market order didn't fill yet, which is surprising. I just want to make sure that this is working properly if we're going to do demonstrations on it. Control F. And I got these new things on here. I want to see if they work. Oh, man. I forgot what they're called. Yeah, they're buttons, and they have like a certain amount. Like if I hit P1, 100 will come up. If I hit P2, 200 will come up. All right, so let's see. Market, confirm, send, send. There we go. All right, it's sold. Okay, so back to it. So those are the 2 out of the 4 that I want you to know. Now there's one more. Oh, no, that's 3 out of the 4 I want you to know. You know the VIX, you know the SPY, and you know TVIX. Now you can't trade options. If you go to the trade channel to trade options on TVIX, nothing will come up. Okay, there's no trade. There's no options for TVIX. However, ProShares, which is another company that makes something very similar, yet not as volatile, but almost as, something called the UVXY. And it literally does the same thing as the TVIX. Only difference is, let's take an example right now. The UVXY right now is down 1.49%. And the TVIX is down 1.57%. And now this is down 1.35%. This is, the point is, this is a little less powerful than the TVIX. It makes the, if the TVIX is up 15%, this will be up like 12%. But you can trade options on it. So that's the best part of it. That's the whole point. And now, there's something very important to know when you're trading stocks. And it's something I found kind of interesting because I was talking to an AI technology company the other day, and they were explaining to me kind of how their AI works in the background. And they said, well, if you're trading an airline stock, our AI technology is looking at all the airline stocks and everything affiliated with the airline stocks to kind of figure out what your airline stock is going to do. I said, well, that's something I do every day. I like to trade the market every day. And when I say trade the market, I mean UVXY or TVIX. You make a lot more money trading that than you do just the market itself. So when I say trading the market from now on, it either means I'm trading UVXY options or I'm buying TVIX stocks. And I'm going to show you how that related with the channel, plus the information I just told you about AI, is a recipe for success. And if you made it this far along in the seminar and just watch this, this kind of like what the guy from the AI company was saying is my, usually I'll have the TY here, which is the 10-year note. And I want to turn this trade off. So I always have this grid up, always. You got the triple Q, which is the NASDAQ, the SPY, which is the S&P 500, the Dow Jones, which is the DJX, the VIX, UVXY, the 10-year note, WTI, which is crude. Crude is a huge indicator for the stock market. If crude is popping up, it's, I would say, 90% likely that the market's popping up. And then you have gold. If gold is popping up, it's 97 pop. There's a 90% chance, not a 90% chance, but I'm 90% positive that if gold is popping up, the market's going down. Okay, so gold has an inverse relationship and crude has a direct relationship. And sometimes I'll take out the 10-year and I'll throw a big name on there. I'll throw something like Apple on there. And I'll constantly change it up. I'll say, hey, Apple, what are the big names in the S&P 500? What carries the most market cap? Well, we know Apple was $1 trillion not too long ago. Amazon was second in line. Pretty much all the FANG stocks, except for Netflix, are pretty powerful. So I'll usually check those out to see how those are doing. And this is my screen that tells me, hey, this is what the market might do. Now, I want to get into something important here. The market has been following a trend, and I'm going to draw it for you because it's kind of important. It's been following a trend lately that over this period where I showed you where we've been kind of flat, I'll show it to you again. It's like this flat period right here over the past 2 months or so. Really nothing going on, down a little bit, but it's flat. It's not moving in a direction. And you can tell it's actually consolidating to a point, and it's getting ready to break. It's an even wedge. You can't say it's a descending triangle or an ascending triangle. And what does that mean? And I wish I had the pen still, but so if it were, and this is the Dow Jones, by the way, not the best indicator, but let's say that this was, let's look at what it's actually doing. It's kind of just consolidating, and keep in mind this is the yearly chart, so we're looking at daily candles. It's kind of just consolidating to a point, and it's not really even. It's not really, you can't, when it consolidates like that, it can shoot in either direction. You really have to look back further to kind of figure out what it's going to do or use other indicators. It does appear bullish that it is on top of all the SMAs and EMAs. That's what all these lines are. So there's a possibility it could pop to the upside and retest the highs. That would be my first logical prediction. And then around the election time, that I think it will pop back down. But the market, now forget all that for a second and look into the left corner of my screen. The market has been doing the same thing, and it goes both ways. It's been doing it either like this. It's been opening up, popping up just a little bit, dumping down, popping up, and then kind of here it's kind of like whatever. It's kind of just all over the place after 12 o'clock. It's just kind of, let's just say flat. Sometimes not. Sometimes the channels continue. But what's important to know is that these channels are very easy to see. and very easy to graph and very easy to spot. And once you can, you could just sit here all day and make money on the market. And that's what we've been doing all week. We've been doing our small cap trades, our gap and goes in the morning. Some of them have been good, some of them haven't. But even when they haven't, I don't care because I always play UVXY after and just playing the channels. And we finished positive every single day this week because we've basically come to the conclusion that the market's been doing the same exact formation. Now, sometimes it's the other way around. Sometimes the market will open with a pop down. Then it usually pops up and then back down. But whatever it does at the open has some significance. And I don't know why that is. Don't understand it. I think it has something to do with computers and AI technology and just repetition. And so let's go ahead and let's put this into action. Friday was a perfect example, but they don't have Friday yet. So we'll use Thursday. Or I don't even care. You can pick any day of the week. I don't want you to think that I memorized the chart or I'm cheating. It works every time. Let me see. I'll go see. If anybody gives me a date, I'll go to that date. But it's got to be within the last 2 weeks this has been going on. Maybe even a little further out. I don't care. It goes as far back as to February 26th or something like that. Let me just take a look. Yes, this is recorded. Okay, so nothing here. I can't see the messages here. And no messages here. All right, so we'll just do Friday. Or no, Friday's not up. We'll do Thursday. So let's get back. Let's close this down. And let's make this back to a daily, 1 minute. And we're going to go and we are going to play the market in 2 ways, option and stock. On every swerve within the channel, you trade stock. You trade the TVIX because it's going to fluctuate. In the swerves in the channel. So not only are you making money from it going down in the channel with your options, you're also making money from its swerves. All right, so if you can get this down, you only need to do this. You never have to look for anything, not for a while, not until the market changes. The market's always changing and we're always adjusting. So this just happens to be what's going on right now. And we will test my theory about how every day that this is how it works. So the most recent date is today. Okay, boom. Let's go back a little bit. Go. All right. So the market, it's 9:30 in the morning. Market's about to open. Let's go over here to make this lilac, make it a daily. And I'll also explain some of these indicators to you as well. These indicators I use big time while trading the market. So I use the indicators. I use whatever's going on in the news because we have a very news-driven market. Anything comes out about China. And so, China this is where there's possible trade talk. Market's going to go up. And I already know to exit my positions if I'm short. If I'm long, whoop-de-doo. So a professional trader, and this is something my mentor who's worked on Wall Street, he's got 25 plus, probably 30 years experience now, has taught me, is that professional traders don't get out of trades. They're either long or short. And let's go ahead and, is it not playing? Oh, it's not playing. That's why. Let's play it in 3 times. Fast forward it a little bit here. And okay, so this is the S&P 500. So let's take a quick look back and see what's going on, just so we have a feel. 5-day, 5-minute. Okay, so it looks like the market over the past couple of days has just been flat. It hit a low at 277.64. And okay, market's open. Okay, it's popping. We can see it's popping, right? It's popping at the gate. Let's take a look at everything real quick. Yup, S&P is popping at the gate. NASDAQ's popping at the gate. Oh, it's thumping down. Interesting. Dow Jones is popping at the gate. VIX will be dumping. Yep, look at the VIX opening all the way down here. The market's doing good. The fear index will obviously be low. So UVXY is obviously dropping because it's based off of the VIX. Okay. Facebook is taking a dump. Interesting. It just happened to be here. Is that a potential sign that stocks are going down? One thing I like to do is look at the heat map and see what all the stocks look like. And another thing I almost always do, and I want to go ahead and I want to pause this for a second. And, I like to go to CNN Global Markets. I like to take a look at this at the open. If, wow. Anyway, so if I see the Shanghai and the Nikkei and the German DAX are all down, and it's a good indicator that our markets will go down. If I see they're all up, then yeah, it's a good indicator that our markets will go up. But what's been interesting is there's been times that even if these markets are all up, it shoots down. But I do know it's going to go back up later because it's been following that same formation that I've identified earlier. So I'm looking at the global markets. Okay, let's press play. Let's watch. I'm looking at everything. Okay, so obviously gold is going to be, wait a minute. Do you see something interesting here, guys? This would spike my interest. Did I not hit play? Yes, I did. This would spike my interest. Gold actually seems like it's popping up a little bit. And crude, kind of opening to the low side, but popping. Still, everything is above the VWAP. Everything is in kind of a bullish formation. Now, when you trade options, you got to wait at least 12 minutes. Otherwise, you're going to get destroyed by volatility. So if we see a pop, and now it's dropping, and now it's going back up, we're just going to kind of watch. We're going to look at everything. Facebook's popping back up. Okay, let's look at another one. Maybe, Apple. Oh, Apple's popping up, and now it's popping down. So are all the markets. Interesting. Interesting. So it popped up out the gate. Now it's popping down. But it's too early to buy. So let's wait and see what happens here. Look at that. I don't remember this. This kind of throws my whole thing out the window. So now this is telling us that the market is going down. So if the market's going down, if it continues like this, then we would buy, we would get ready to position ourselves to go to the upside. Now, let's just watch. Let's wait a minute. I'm going to fast forward to about 10 minutes here. But keep in mind, gold is going up. Crude looks like it's starting to curve. And the VIX popped up, and now it's popping down. UVXY is getting ready, but it's popping down. Markets are popping back up. Okay. But if you see something like that, woo, it's the first 5 minutes of the market, so it's not uncommon to see candles like that. But somebody's selling out there. Somebody is selling. That's not just a coincidence that a bunch of retail traders decided to sell at 9:34. There's some heavy selling going on out there. But here comes the buys. People are going to pick up the stuff at the bottom feeders or buying stuff at the low price. But gold is going up. Keep in mind. Crude is starting to curve. And I'm just watching. Can't get in on options yet. It's too early. It's only 9:36. But based on the formation, yeah, it popped up a little at the market. It's really trending to the downside. So I don't remember I might buy to the long side. But we don't have a clear-cut channel yet. That is the key. That's why the title of the show is Stay in Your Lane. I can't identify a lane. It's too choppy. It's too all over the place. I can make predictions based on what I see. You have a nice Gartley pattern right here. That's a prediction that it's going to pop to the downside. Okay, you see that little Z formation? And if Apple pops to the downside, it's very likely the other ones will as well. Amazon's already popping to the downside. I mean, this is basically telling you, hey, guy, here's the channel. So let's see. Let's start to graph in that channel and see if it is a channel. Let's see if it is indeed a channel. Oh, yeah. All right, so we have a pop up here. It's too steep. So we're going to probably have another pop. It's going to have to pop up a little bit. It's too steep. Yeah, there we go. A channel is typically never like straight down. All right, I would assume wherever this pops up, that's my channel. That's the top of my channel. So now let's draw the bottom of my channel. Now you want your channel to be pretty much perpendicular. Parallel. Sorry, I'm losing words today. I don't know, words that start with P. Oh, I can't remember them. So I really don't have a channel yet, because that's not a channel, because now it's popping, or maybe it is a channel. Let's see, maybe that's the beginning of a channel. All I know is it's not 14 minutes yet. It's dropping to the downside. Now you can hit this button here, extend to the right on your, you hit the line, you hit extend to the right. Okay, extend to the right. So now we have a little channel, and the channel is clearly popping to the downside. All I want to make sure is that it doesn't break out over this line. If it gives me, okay, what time is it? It's almost 9:42. If it gives me any inkling that it's going to break over that line, I'm not going to take a short position. It looks pretty well set within the channel that we've identified so far. Wait, let's see. It's getting close to 12 minutes. I mean, yep, 12 minutes. It's now 9:40. It's been unable to break that. Wait, here it goes. Looks like it's trying to break that. If it breaks that, then you can potentially play it to the upside. Okay, no. All right, pause. I know you can't do this in real life, but I can here. So it would try to break the top of this channel and could not. All right, so let's press play in normal formation, in regular time. Actually, it might break it. Let's see. I just need a little drop. If it gives me a little drop. Because what you also, okay, boom. I'm pausing it again. There's a formation within that channel that I don't know if you all see, but it is called a bear flag. It's that steep red candle from earlier, and then you have the flag. You have the rivets. Drawing tools. Now, okay, so here's a rivet. I mean, here's a flag, and here's the pole, and here's the flag. So you have a flag. It's coming to a consolidation point. Usually, when you have a big red candle followed by a flag like that, it's considered a bear flag. It usually means that the market is going to dump to the downside. We now have 1 minute and 30 seconds before we can buy options. To me, that's looking pretty damn bearish. So what I'm going to do is I'm going to just get ready, and I'm going to go to trade. Can't trade TVIX options, but I can trade UVXY options. Now, how far do you buy out? Well, we're only day trading. I don't like to buy 1 week out. I like to buy at least 2 weeks out. 1 week is just, you can do it, but I prefer not to in case I'm ever in a position I have to hold overnight. Something just happened because of the way that this stock's just moved. See? And look, it's not 12 minutes yet. It's just before 12 minutes, and it broke out of our channel. You know what that tells me? I'm not buying this to the short side. If I wanted to, you broke out of my channel. There's two things that typically happen when a stock breaks out of a channel. Usually it'll completely reverse and go in the opposite direction. Either it'll break back into the channel, or I know that's three things now. It can break back into the channel, but it's unusual for that to happen, but it does happen. And or it can just kind of reset the channel, like readjust. Like this channel might be too steep. This is more than a 45-degree angle. So what I think, I see it breaking back down into the channel, very steep. Now, boom, pause. What else is going on here? What else is going on? Is there anything significant going on that you can see? Let's just take a look. Indicators have a lot of room to go south, by the way. They have a lot of room to go south. This MACD line can go all the way under this line where you see all the little bars on, and can go all the way down under. We have the bear flag. Now we have what looks almost like a pennant. We have the attempted breakout of the channel. Maybe we drew the channel wrong. Now we have a new channel. And the drop to the downside. But more importantly, we're at a whole number level. We're at 280. And something I try to tell you guys all the time is that whole numbers, the more whole, the bigger the deal. To me, I see complete bearishness in this formation. It broke out of the channel and came back in and is now dropping. I don't need to see any more. To me, this looks bearish. Let's look at the other ones to clarify. Look at the Dow. Look at the NASDAQ. Okay, we've waited too long. Look at Amazon. Look at the big stocks look at all the FANG stocks. Look at Apple. Down. And I'm just assuming probably Facebook as well. Actually, somehow Facebook's up, but no, now there's a big drop. UVXY is flat. The VIX is kind of elevated. Crude is popping to the upside, which usually the market goes with crude. So this is interesting. And gold is kind of flat. So it looks like we're at a point where the market is just starting to break to the downside. Now, this is dangerous because we don't know why we just had this huge spike to the downside. And if you buy UVXY options right now, you could potentially get slaughtered because of the price hike with the volatility. But let's press play. Let's get ready here. Let's press play. And watch the channel play out. Okay. And also it's at 280. We want to see, it still hasn't broken 280. It's popping to the upside. Boom, pause. Okay, you see how it's popping to the upside? But I already know that this is going to the downside. Like I already can tell by looking at the NASDAQ, by looking at the Dow Jones, that this is going to the downside. Me, at this point, I would take the risk. Even though crude is going up, even though the MACD is telling me, hey, it's looking like it's going to pop up a little bit, I would personally take the risk. But let's see. It popped back up out the channel. Let's play it safe. Let's play it safe. Let's first play. Oh, what am I doing? It's breaking out of that channel or it's creating a new one. You know what? I can see the bearishness in this. I want to take one more look. Now that that popped up like that, I paused it. I want to take one more look at this. Oh, crude is popping up a lot. And gold is hitting new lows. And now Facebook is popping up. It looks like, to me, it's not time to short. But it also doesn't look like it's time to go long. I wouldn't want to go long on this. This looks like it's getting ready to drop. Okay, so what you could do in a situation like that. So what I might do is, okay, it looks like it's getting ready to go into a situation where it's going to drop, but it did just break out of a channel. I'm going to buy one UVXY call. Let's say I'll buy one UVXY call, and while the market is actually up, because that's the best time to get it, when it's nice and cheap. Let's say I buy two. I'll buy two. Let's see if I can get it for $3 or 302. All right, I was able to get two UVXY calls. Now keep in mind, a call on UVXY, what does UVXY do? It does the opposite of the market. So I'm going to hold that. Okay, now look, the market is popping to the upside. That's totally fine. That's why we went light in this position. I am in no way, shape, or form concerned at all on that little pop, because I can see a channel. See, the reason I don't use the DIA, and I suggest you guys do it too, there's something called the DIA, and that's the Dow Jones as well. But the DJX is the Dow Jones actual like indice. It shows channels so much better. There's going to be a channel that has to form. This is a bearish formation. So as much as it wants to pop up to the upside, it doesn't scare me. Heck, I could hedge my position right now. How do I hedge my position? Well, I'll show you. So it's popping to the upside, right? Well, now it's popping down. All right, this is how you can hedge your position. Remember how I said, I don't know if you can, I know I can shorten this platform in the TradeNet platform, but I don't know if I can short TVIX in this platform. So just as a little protection, I'm going to 100 shares. That sounds good. Short. So now I'm short 100 shares as a hedge, right? Going to speed it up a little bit. Okay, see, now my 100 shares is going up. Now, one thing I want you to notice here that's interesting is my delta and my shares is 100. They're both 100, so it's like an exact hedge. If I wanted to make money to the upside, I would short more than 100 shares. But again, I don't think that this market is going to the upside. Let's see. That is just, look, well, I could be completely wrong. That would suck, right? But I'm hedged, so I don't care. Okay, so it's popped up. Okay, now it's dumping. It's dumping. I'm going to go ahead and let's take a look at the big one here. Okay, do you notice what happened? We now have a channel. I think we have a channel identified. Let me remove this drawing, and I'm going to immediately, don't know. Let's see if it breaks over that. Extend to the right. Okay. I think I've identified the channel for the Dow Jones. Let's see. It's popping up. Now that I know it's at the top of the channel, what I'm going to do is I'm going to go ahead and I'm going to go to my monitor, and I'm going to create closing order, and I'm going to get rid of these. Maybe. Let me look at the SPY real quick. It's kind of flat, and it's above the VWAP now. Before it was riding the VWAP. This is the VWAP. Usually when it's below the VWAP, it's bearish. When it's above it, it's bullish. So far, there's no real channel identified here. It's kind of just flat. So that's why I have my position hedged. If it pops up, I make money. If it pops down, I make money. So see, now I'm making money here on my TVIX, on my 100 shares, because the market's popping up. It's popping up. Maybe I should increase my short on the TVIX. Usually I'm looking at two screens while I'm doing this. Okay, it broke above and it's coming back down. I think that that's it for this one. Let me sell these or buy these, whatever. Okay. All right. I just sold my hedge. I don't know if that was smart. All right, I need it to break 280.50, and I need it to go back down. We're going to fast forward here because this will take forever. Let's put it on ×3. If it doesn't go back down, I was wrong. Okay. Yeah, it's having a lot of trouble breaking up here. Maybe I should rebuy a hedge. No. Okay. I'm not going to pause it, but the formation I just saw, you have a hanging man candle followed by a red candle. Now it's a green candle again, of course. But that candle needs to be red. If that candle's a red, that's a very bearish formation. And that means we're going to see a drop to the downside. Also here, you have a doji candle followed by a red candle. That's the sign of a red thing. Okay, so now that we know it's going down, now that we just had the confirmation, those three candles, do you want me to pause that and go over that with you again? What I just saw there, that just told me I have a doji candle followed by a red candle followed by another red candle. Look up doji candle. Man, I'll share this in the breakout trading group. Actually, I think Wallace did. It's candle reversal patterns. And that is textbook. And we're going to redraw this line now that we know where this channel is. Extend to remove drawing. Okay, so this is kind of, it takes a little bit of skill, a little bit of intuition. Extend to the right. And like I said, right now I'm doing it in slow-mo I don't want you guys to think I saw this chart before. I thought I was doing Friday's chart, which is a chart I actually saw before. I've seen this. This is from Thursday, but I don't remember it like the back of my hand. I look at thousands of charts. Anyway, so we're going to pick another chart, and I'm going to do it again, blind, and one of you guys are going to pick a date, but it has to be like pretty recent because this kind of up, pop down, and then pop back up formation that's been happening is kind of new. But I don't even care what the date is. Pick any date. I will still be able to. I don't care. It doesn't have to be within the last 2 weeks. Pick any date. This is like a foolproof system. So, okay, so now the market is, let's press play and let's go ahead. Now that we know that the market is, we just saw confirmation. Let's go UVXY and let's increase our put position. Let's buy some ones that are expiring in a week and show the difference on profitability. I'm buying just at the money. Just at the money, and we'll go a little heavy this time. We'll go like $200, so that's $1,000 for the 5 of those, and it filled. All right, and let's go ahead and look at the chart. Okay, it broke below the 9-day moving average. Let's fast forward a little bit. It might actually pop more, and if that's the case, I might have to buy a little more of a hedge. Now, typically what I do is I buy these hedges on, this platform, because I could buy as many as I want. There's like no limit, and I can make a lot of money just from hedging my positions. Okay, boom. Nice. Okay, so now we go in. Let's put it at regular play size. Now we have kind of a confirmation that it's breaking to the downside. The big confirmation will be when it breaks over the lows, which is 279.90. If I see that, I will go in heavy as hell on UVXY options. What's going on here? All right, so let's press play. Let's just let it go. So we're about a half hour in. See, this is a little different than it usually does. Usually it pops in one way, it pops up, whatever it does at the gate. This one was kind of weird. The problem is this is a lesson on channels, and I don't see any channels. I should have picked a better date. Let's go ahead and fast forward a little bit. Maybe like, I don't know, an hour. Ooh wee. Okay. All right. All right. Well, it popped up a lot. Then what it go? Yeah, it looks like you can see here, remove drawing. The initial channel was actually remove drawing, remove drawing. The initial channel was actually right here. Boom. But it was kind of a little bit of an upward wedge. And then it looks like now it broke down to the upside. But I want you to see something happening here. I don't know, extend to the remove drawing. Now we have it popping back up. And we're probably losing a lot of money on those. We're up $5. So we're kind of flat, and then boom. Okay, so now look at this channel, guys. Look at this downward channel that we have. This is what I wanted to show you. We got this beautiful downward channel. No, that one's not right. Gotta want to make it as parallel as possible. It's got to be right. It's really not going to break through this side. You're more worried about your resistance because your resistance is telling you when to get out. But you can see how it's got these swings within this channel. This is kind of a tight channel, so I don't know if I would play the swings, although you could. So you could go to, let's see, let's make this one TVIX. TVIX. Okay, so it just had a pop to the upside in that channel. So what I could do is I could also, let's say 200 shares, or we can go heavy in this one. 1,000 shares, buy market, right? Oh, now it's popping up. You know, you're really supposed to buy it at the top of the channel, but I'm just trying to, I'll add if it goes to the top of the channel. The reason you buy at the top of the channel is and then you sell at the bottom of the channel. Remove drawing. This seems to be the bottom of the channel here. It's a little wedgish, this channel. Okay, so I'm scalping. You see how I'm doing? Now it's popping back up. I can sell. Now I'm selling them because we know it's going to pop up to the top of the channel. Not in this case. In that case, I'll take protection. Wow, that's really bearish. Your best bet is to, on a channel this thin, probably not the smartest idea to try to buy. This channel is oh my God, extend to the right, extend to the, remove drawing. Okay, wow, look at that drop. Should have had bought those in the other direction. Oh, and as it's dropping all along the way, you are supposed to be selling off. So we don't know how far it's going to drop. So we're going to sell three here, three of our UVXY options here. Okay. That stupid $5,000 thing made it hard to tell what we're doing. Now, okay. Ooh, popping up. So here's basically the other side of the channel. So it's broadening. The channel is broadening. I'm not going to go as heavy, but I will play the channel to the upside. No, not in this one. Not in this case. This is too bearish of a channel. In some channels, if it's not so declined, you can play the market to the upside, to the downside, to the upside, to the downside, but not right now. This is way too bearish. You can definitely buy shares of this. Looks like it's trying to break 280. That's the big part there is 280. This needs to break 280. Let's fast forward here. But the key thing I want you to have identified here is that there's a channel. And I want you to note where that channel is. And it's also going to give you your exit point as well. Okay, so it broke. It looks like it broke, but the chart is not updating. Well, that's not gonna help me. Sorry, I can't see anything if the chart's not updating. Sorry, yeah, this on-demand gets a little fluky. Chart's not updating. Okay, see, here we're in a very dangerous position. It looks like it's trying to break the channel here. Now, it didn't break the channel and went back down. That's good. So one thing you could do is you could actually add to your position here. I wouldn't add a lot, but you know it's going back down a little more, so why not add another, whatever, 300 shares, whatever floats your boat, because you know it's going to go down now. And now, check it out here. We already identified the lows of the day before at 279.91. It broke those. I'm buying more TVIX because now it should pop to the downside a lot. It did break the lows, didn't it? Oh, it looks like it broke the lows before. So I'm buying heavy into that position. Now it's you know, what do I have? 48. You know what, let's take some profit off the table before this reverses on us, because it is on 3 times speed. At 10, so all right, so we're just focusing on the channel right now and just waiting for it to break the channel. We're also going to start selling some more of these options here. Go ahead and sell. Slowly scalp your way out. You buy heavy at the top once you realize you're in a channel. Although I kind of just guessed it. See, here's the thing. You have to take a little bit of risk when it comes to that. And what do I mean by that? I mean, basically, we popped out the gate, started dropping. Then we had a lot more bearishness that we saw in the Dow. Crude's kind of popping down now, but popping back up. So I'm a little worried the market's going to pop back up, and gold is also popping down. But we do have one thing going for us right here. We have a upside down cup and handle on the QQQ. So that is actually telling me, hey, Luke, this is going to go down even further. Why don't you buy a couple more of those options, you know, before this cup and handle plays out? And I'll buy like, you know, because we'll buy like 3. And did that cup and handle play out? And that's just basically what I'm doing. And I'm going to hold this short position. Ooh, cup and handle didn't play out. And now, my friends, okay, this is it. This is the moment here, I think. This is the moment. It's trying to break out of the channel. This is a red flag to me. You see how it's kind of like smoke on the top of a ceiling? This is very scary to me. This right here, I would start reducing my positions. So I'd immediately get rid of that one I just took, because I have nothing but loss to get on that one. That cup and handle didn't play out. And then let's hit play. Well, no, because I want to catch it if it breaks. I would also sell. I would make my position as small as possible, but I don't want to be completely out. So I'll reduce here. Confirm. Now I think all I have left is one puny little option right here. And let's see if it breaks or not. And then I'll tell you what to do once it does break. Wow, tricked me. It's at 279.50, which is a historical support. What I will do, see, but we still have skin in the game. It's not like I would be like, oh no, I got out because I was scared it was going to break. No, I took a cautious move. And don't forget, I still could buy shares of TVIX if I wanted to. I still could go in right now and I could say, you know what? Let me stock up on some of these shares here. You know, that was right at the low of the channel, so that was a bad time to do it. I was just trying to demonstrate. But let's just keep an eye on it. We're in a position. We have one options contract left. And let's take a look at our indicators here, our signals of whether the something's about to change lanes or not. One thing that I do notice is if you look at the Dow, is it's getting pointier and pointier. It almost looks like it's consolidating a little bit. You have a head and shoulders on Facebook, which means Facebook could go down, which might mean more bearish activity. Let's look at the other stocks. Not really doing anything. This has like an upside down cup and handle, which means it could shoot to the upside. I mean, upside down head and shoulders. Crude is kind of popping up. No, the market's just continuing to the downside. It is flattening here a little bit. So there's one thing I do want to point out. If you're ever in a channel like this, and you're this far down in the channel, and you're playing the market, and you look at the news, and there's nothing really going on, nothing bad, they're not saying, ooh, massive sell-off, then it's probably just a natural fluctuation. Because I want you to notice something. 280 to 281 down to 279.50. It's a $1.50 move. It's not a crazy move, but it's a move where you can make a lot of money with just a little bit of money. Now, I showed you here that, you know, if you just look at the options contracts, right? So you have, let's see, 170 and then 53 still open from the one that you didn't sell. But how much were those contracts actually worth? How much did you actually pay for those? Let's see. Bought two, so it's 600. That's 1,000. 1,600. And then you got those, no, those are three that I sold. I know I bought and sold three like right away. But if you ignore those, you know, $1,600 is what you spent. And you made $150 on a fluctuation to the downside. But that's not it. It's going to break the channel. And then it's going to do the same thing to the upside. And you get to make that same money to the upside. Not to mention, the whole time I'm on here, or even just on here, wherever you want to do it. Where am I? you know, playing TVIX. You know what I'm saying? Making money off of that as well. So let's check the charts out. Eventually, this is not going to go down forever. That's the trick of the game. Is as you're slowly when you're in a channel and you know you're in a channel and you know you bought the right ones, you bought the calls and you know they're making money, the hardest part is when to sell. Well, you can wait for the confirmation of the breakout of the channel, but I'm telling you, your option will drop maybe 3/4 of its value, 1/4 of its value, maybe more. So, you can look around for other indicators on what it might be. Okay, it's getting close to 279. I don't think it could break 279. It's also consolidating. It looks like it's sharpening. Wow, look at that. It's just moving and moving to the downside. So I wanted to show you. I want to see maybe this has to break out of this channel. If this just kept going down like this all day on a Thursday, then I would have made a fortune because I was buying UVXYs on Thursday. So let's let it run. Let it run. Now don't forget we got one options contract left. Was worth 50 before. Now it's worth 60. Imagine if you had 10 of them. And these are you only paid $200 for these. So at 10, if it went up 10 bucks, made $100 in the last few minutes. Okay, so now it's popping up. It's popping up. Now remember the value of that options contract was $60. Now it's 67. My gut would tell me when I see a sharp move like that, come on, man. I don't even need this open. I see a sharp move like that to the upside. I want to see what else is going on. Oh, here it is. Crude is kind of just lagging. Okay, it's starting to touch the top of the channel now. You can see here, starting to touch the top of that channel. So you want to be very careful. Okay, that looks like it's getting ready to break out of the channel. Maybe not. Now, keep an eye on that option. It was 62nd, 67. This is a long going channel. But I want the important part is to catch the break and how you commit to your reversals. This is eventually going to break out. But and keep in mind, I like to take money on the way down. Some people say, well, why don't you just hold it until it breaks out of the position? Well, because when I have money in hand, I like to take it on the way down, and I'll save some for the bottom to when it gets to that point. But the key is to scalp and take profits along the way, because who could have foresaw that the channel was going to go this long? The channel might have only went this much, might have stopped right here. And then you would have lost money if you didn't take it. You literally, if you would have bought here at the beginning of the channel and it only went to like this VWAP line and then broke out of the channel, you would have lost money. Okay, let's look at it here. Yep, it broke out of the channel. So what do? You sell your positions. Don't even think twice. Don't even look back. Get out of your positions. And you immediately go to reverse. I hope you guys all saw how that broke out of the channel. It broke out. Looks like it's not doing anything, but this is what the SPY has been doing repeatedly. So it broke out of the channel. So what am I going to do? Now I'm going to buy UVXY puts. I'll buy the 43 UVXY puts. I'll buy 10 of them. That's $2,800. Shoot. See, it's going to be hard to get a fill now because now the prices are going up. Okay, I got filled at 290. So 10 of those is about $3,000. That's pretty heavy. And it looks like it's going back into the channel, but it broke out of the channel. And typically when the S&P 500 breaks out of that channel, it stays out of that channel. It'll revisit. Either that or I'm totally wrong. But it's been pop whenever it pops out of the channel, it's been staying out of the channel. This is just could be well, let's look at the other indicators because I didn't lose anything right now. Let's see. If I decided to sell those, I would have only been down $10. But don't forget, I can always hedge. If I had to, I could hedge my position. But nope, see? Okay, now it's taking off. That makes sense. It does weird stuff like that, but just keep in mind, if it breaks out of that channel, sometimes it rides the channel line. It uses it as a support, or sometimes even as a buffer. It'll kind of ride it. But if it goes down any further, I'll just hedge my position. I will short some or buy some TVIX because it broke the channel and it's turning now. It does not cross over a double yellow line unless it's making a turn into an intersection. And now you can see, it broke out of the channel and now it's popping up. Now you can test this theory and I promise you it'll work. You can watch me do this theory. I do it almost every day because for some reason the market's been working like this. It's been creating channels. Typically whatever it does in the morning, so you could see in the morning, this was a long one. Usually when I say morning, I mean between like 9:30 and 10. It'll pop up and then pop down. That's why I was so confident when I saw it popping up a little bit, but it looked a bit like bearish. I was so confident to get in. And yeah, so typically it'll pop up and then usually not as late as 10:30, usually sooner, usually at like before 10, it'll start. And now you can see. So now what do? Now we're in. All we do, so the market made a turn. So what we're going to do is create another channel. And while we're here, already up $250 on those options because we called them early, and we're going to profit on that. We're going to make sure we take some profit right away. We're going to sell, wow, I'm getting confused. We're going to sell 3 right away, lock some of that profit in. But we still want to have skin in the game. For sure. Whoa. All right, nope, all it's doing, see, stuff like that does not scare me because all it's doing is creating another channel. And we're going to let that run for a little bit. You know what, let's just fast forward it to about, let's go and say, it's about 12 o'clock, so let's say 13 o'clock. That's kind of far out. Okay, beautiful, beautiful, beautiful. Beautiful, beautiful, beautiful. Okay, so it broke out of the channel here. Now let's identify this new channel. It goes from here. I think we went out too far. It goes from here, and then here's the bottom of the channel. Here's the bottom of the channel. This is a consolidation channel. This is probably going to pop down to the downside. See how it's kind of like thinning out? But you can also see a channel within the channel right here. And that is kind of parallel. So it's kind of hard to tell. But let's see what those options are worth now. Now those options are worth $500. So we're going to go ahead and scalp some more money off the top. All right, and what do we have? Four of these left. So you pretty much know what to do at this point. Extend to the right. Extend to the right. When we see it break out of the channel, we sell. We get out of everything. We get out of the rest of our shares. So let's just, for out of curiosity's sake, I want to know, let's go out one more hour. Okay, so it broke out of the channel. I screwed up, but had I had caught that, had I had been watching my monitors, I would have sold and I would have made more money here. But that's it. Channels and the SPY. And I think I'm going to have to edit this video because I can't believe how long it is. But I definitely could do that on YouTube. Facebook is screwed. But and then pretty much at the end of the day, you can identify another channel if you want. But as everybody knows, volatility just kind of slows down. You want to catch that first and second clear channel, and that was this one and this one. And this one was not a clear channel. I couldn't identify it. Maybe if I would have waited, I know we fast forwarded through that part, I would have said, oh, here's an upward channel. But I would not have bought it. You don't buy into the first channel. Again, remember, it's going to pop. This is the same formation I drew for you guys in the beginning of this seminar. The pop up in the beginning, the pop down, and then the pop up, and then kind of flat for the rest of the day. Let's go, let's see, what time is the market close? All right, so actually the market, this channel kind of reconnected. It went, it broke the channel, and then went back up. SPY and channels, you will just make a fortune. You know what you need to know. You know about UVXY. You know about TVIX as a hedge. And if you follow along and you follow me as I do it throughout the day, it'll make more sense and it'll just become second nature. You'll just be like, oh, channel. Oh, let me make money here. Oh, let me make money there. It's just so easy. It's so easy. I don't even, honestly, it's just insane. Hopefully this, the market's been like this forever, but because the market is like kind of flat, it's kind of more defined. When 3 months ago when the market was volatile and all over the place, it was either just shooting down or all over the place, but now it's kind of like it's easy. It's like easy. Let me see if you guys guys have any questions, and I'll go out to any date that you pick, and we'll see if this works, and make sure it's within like the recent time, because like I said, back 3 months ago when the market was crashing, you couldn't do this, but because the market's flat right now, it's kind of doing the same up and down thing to keep it kind of at level. Where's my breakout room? The lines on the chart were a lot of people asked questions I was not able to answer. All right, let me end these videos on Facebook and YouTube, and then I'll take some time in the private chat with you. What lines? Oh, Bollinger Bands and Kelter Channels? Maybe? I don't know if you're still there. But everybody left? I can't believe everybody left. I know that took really long. I have to edit that video. Leon, that lady Jamie sounds like a bitch. I don't know who the fuck that is. But anyway. Thanks for the videos. Alright, I'll see you, man.